Hi everyone, how you doing? My name is Mike Guterri with Health Markets. Wanted to take about 5 or 10 minutes of your time today and kind of bring you up to speed as to one of the important changes that's happening out there in the world today of health insurance. Through the state of Ohio, our Ohio retirees, OPERs as they are known, are losing their health insurance and will be offered a stipend going forward for the new year. And so this has created quite a bit of confusion and there's a lot of misinformation out there. And with the hold times being extremely long through via benefits and people getting disconnected, we thought it would make sense to just take a couple minutes, kind of clear the air, talk about really what those changes are going to be, how they're going to work, how you can enroll in them, how to get your stipends, all those sorts of questions that we're getting on a daily basis at the Health Markets office. So if this applies to you, please pay attention for the next 5 to 7 minutes. If you know of someone that it applies to, please pass this video along to those appropriate individuals because it will be very, very important for them over the next 4 to 6 weeks to get enrolled the right way. Okay, so I have prepared a PowerPoint slideshow. So let me get that shared with you. All right. And there we go. We have our OPERS best practices for 2022. So the first thing that I want to touch on is going to be how you will get your stipend versus how you will get your stipend and ultimately how that number is comprised. So understand that the stipend will come directly from via benefits, okay? As to where there's also something out there called a subsidy that comes from the federal government. Want to make sure you understand the differences between these two, how they work, and in which situation one might be better than the other, okay? So your stipend is, you're eligible for it because you've earned it. You've worked, your time with OPERS, and the longer you have worked with OPERS, the more your stipend will be. The subsidy, because it's something that comes from the federal government, is something that you receive through healthcare.gov. It is something that is tied to your income, but understand that you can only have one or the other. Okay, so you can have your stipend through VIA, you can have your subsidy through the federal government, but you cannot have both. Okay, so you want to make sure that you do that the right way. Now, here's the important thing to know though, is in some situations, the stipend will be better. In other situations, the subsidy will be better. So how will you know? Well, as a general rule of thumb, the stipend will be best if you are going to be a higher income individual in retirement. Okay. As an example, if you're a single individual and you're making more than $30,000 a year, chances are the stipend is going to be better for you. If you are married though in a two-person household and you're making $50,000 or more, chances are the stipend is better for you. And if you're a three-person household making $75,000 or more, chances are the stipend is better for you. What that means though is if you are a single individual making under $30,000 a year, you may want to see what your subsidy will be through the federal government. If you're a family of two making less than $50,000 or a family of three making less than $75,000 a year, you will want to see if the subsidy through the federal government is larger than your stipend through OPERS. Now, it is our understanding that you will be able to change back and forth each year from one to the other, but you have to make sure you enroll the right way, because if you enroll in your stipend on November 15th, and you get that first deposit of $1,200, you are now locked into that stipend for the year and you will not be subsidy eligible. So you will want to make sure that you do a good research and compare the two options before you click yes or tell via benefits that that is what you want to do. So let's talk a little bit more as to how they can be applied. Well, your stipend can be used for your monthly premiums. It can be used for out-of-pocket costs. It can be used for any medical event. It is a reimbursement, as to where your subsidy can only be used for monthly premiums. Now, it will be very rare that your stipend will be able to build month after month, because for most people, your monthly premium is going to be higher than what your stipend will even be. But if you are in a situation where your monthly premium is less than what your stipend is, it technically would accumulate from year to year. Okay, so definitely go back and watch this part again if you have confusion on the stipend or the subsidies. But again, just to summarize, stipend, you have to call via benefits. You have to enroll in it based on your years of service will determine how much your stipend is, and it does accumulate month over month. Your subsidy is based on your income. You get it through healthcare.gov. And if you're making less than $30,000 as an individual, less than $50,000 as a husband and wife, less than $75,000 as a three-person household, you should compare to see which one winds up being better in your particular situation. Let's drill a little bit deeper. Next, we will talk about the dates. You need to enroll in your stipend no later than November 15th. Okay, you need to let VIA know, which means that we are only about 2.5, 3 weeks away from that stipend deadline. Now, that does not mean that's when you need to enroll. And it is very important to know that while you need, if you're getting a stipend, you need to get that stipend through VIA, you have the ability to enroll with any agency out there. Do you want to work with someone local? You have the right to do so. Do you want to work with someone that you already have a relationship with? You have the right to do so. You have to get the stipend through VIA, but any local broker can help you with the actual insurance enrollment. The significance of that is the deadline to enroll in the health insurance is not until December 15th. So you have an extra month after your deadline to enroll in your stipend to get on a plan. Okay, so a couple important deadlines there: 11/15 for your stipend, December 15 for your actual insurance plan. And I know it says on there for 12/31 there are a few plans, but for 95% of people, you'll want to make sure that you're enrolled by December 15th. Next, let's talk about the plans, because this is really where most people are seeing the biggest concern, is they're seeing that plans are very, very different than what they were offered when they were working directly for the state. Well, understand that there are differences between networks, HMOs, health maintenance organizations, PPOs, preferred provider organizations. An HMO says you have to stay in network. You cannot go out of your network unless it is a life or death medical emergency. While a PPO will allow you to go out of the network, you oftentimes will just have a higher copay in order to do so. Which brings us to the next point, the copay. So most plans are going to have some sort of a fixed payment before you have to meet your deductible. Your doctor's office visits, your scripts, all the small stuff typically will have some form of a fixed copay before you have to meet your bigger deductible. And so that's the next point, is the deductible. Well, that's typically in most plans only going to apply to big stuff, hospitalizations, surgeries, major tests, things like that. And so in a typical year, if you're a healthy individual and you only have doctor's office visits and scripts, you usually will not have to meet your deductible. But here's what you really need to know. Most people focus on their deductible as if it is the most important number in their policy. And I want you to know that's not necessarily the case. This next number, the maximum out of pocket, should be the number you focus on the most. Because what that number means is exactly what it sounds like. It is the maximum you will have to pay out of your own pocket if something major happens. If you have a heart attack, if you have cancer, if you have a stroke, you have a bunch of medical treatment. Once you hit this maximum out of pocket, everything will be covered at 100%. Well, many plans will have low deductibles, but then you still pay 20% or 30% up to another number, which is the maximum out of pocket. So look at that maximum out of pocket, because sometimes going with a little bit higher deductible and a little bit lower maximum out of pocket will not only save you money, but it gives you better coverage because your worst case scenario is brought down by that lower maximum out of pocket. Okay. So I know this is a ton of information. I know if this is the first time you've ever had to buy your own insurance, it can be very, very confusing and very, very scary, if you will. And so what I want to do is I want to offer up our services. We do not charge. Okay. We are local right in the Columbus area. We're in Worthington, but you can give our office a call at 614-568-1324. You can email me if you don't want to call. You can even go to our website, healthmarketscolumbus.com. But we are one of those local brokerages who are out there to help. But more than that, we love to educate. We love to teach. So please pass this information along to other people who can use it, other people who are impacted by the OPERS situation. And if you find that you're struggling to get on the phone with VIA Benefits, if you find that you're struggling to get straight answers from VIA Benefits and you need someone that you can trust, please give our office a call. So hope that this was informational for you. I hope you found it useful. Again, my name is Mike Gutteri, and I appreciate the time. You have yourself a great day.